Welcome back, YouTube. My name is Nigel Schroeter, as you guys already know, and I just want to thank you guys for watching, and let's go ahead and get right into the video. So today we're going to be talking about purchasing a car with bad credit, financing a car with bad credit, all that good stuff. So if you are in the position that I was in just merely 3 years ago, your car just broke down, you have a all right to horrible job, and you may not have any money in your pocket at the moment. You may also have good or bad or limited credit. But let's go ahead and say you're in my shoes. You had very little credit, so as soon as they ran it, it became bad. Your credit got shotgunned out at a dealership because you went in and you asked them about purchasing a car, and now you're in a situation of having bad credit, numerous inquiries, low funds, and you need a car. So what do you do? All right, here's what you do. You look into your purchase options for buying a car. So really there's 5 options that you have to buy a car. So option 1 is a cash purchase. If you're in the same shoes I was in, cash purchase isn't on the table. You don't have any cash in your pocket because you work a mediocre job. You can go to a buy here, pay here. And a lot of them, they will give you a couple weeks out for purchasing a car, but typically the buy here, pay here car is the same car that you could have purchased cash. They just put a little upcharge on it, and they're going to charge you a little bit more for it for the convenience of being able to pay over time. Nothing wrong with that, but that may be a good option for you. And then you may start looking into car dealerships, larger dealerships, which are going to offer you 3 main options, which is going to be a used car. They're either going to call it a late model used or a certified pre-owned car. There's a slight difference between the two. A certified pre-owned usually has more warranties than a late model used car. However, some dealerships call them one and the same. And then, of course, the option of a brand new car. Now, depending on what time of year it is, this may help you too. Hopefully and preferably this happens at the end of the year or the very beginning of the year when the dealership is trying to make sales. If you're in this position where option 1 is not an option for you, maybe option 2 is not, maybe the buy here, pay here wants too much cash down, and then you're stuck in the 3 options of horrible. So here's what you can do. If you have bad credit or you have limited credit and you're trying to get financed, I'm going to tell you this. Don't freak out. You will get financed, but it will be horrible. All right. Now, I'm going to tell you how to turn that horrible financing around into being at least okay and potentially great financing. So what you want to do is you want to know the rules to financing a car. So rule number 1 is you don't tell the dealership that you're planning on financing until you're ready to purchase the car. This is because if they know you're planning on financing, they're going to point you towards certain cars. They're going to point you towards certain deals, and they're not going to point you towards what you want. They're going to point you towards what they want. So if you're going to make a purchase this big, a $10,000, $20,000 purchase, possibly more, you want to make sure that this particular purchase is going to be what you want. So go ahead and pick out what you want. Now once you figured that out, now it's really time for you to sit down with them and make it fit your budget, or maybe you have to go down to something cheaper. I always tell everyone, if you're in this situation, you're in this situation. So remember that you're in this situation, and the best thing that you could do, honestly, is to go ahead and go with the cheapest option, because you can always get out of it later. Or, in certain cases, you can go for a more expensive option if you know that you're going to be increasing your income with having this car. So once again, you're at the dealership. You pick out your car. You're going to go sit down with them. Now, what I want you to do is when you go to financing, don't take offer number 1. Turn it down. They're going to come back with offer number 2. Probably turn that down too. And offer number 3 might be somewhere in the ballpark. Then what I want you to do is start looking at that paperwork and look at what fees they have on your paperwork. Fees, not taxes. Taxes you do have to pay. You're not going to get around them. Now, fees, a lot of the times you can avoid. Packages, a lot of the times you can avoid. So they may try to tell you to sell you some type of package. If you don't want what's in the package, tell them no. If you want something extra thrown in the package, say, hey, I want this. Make this deal where you're going to be on the proper side of the table, where you're going to be happy with whatever you get, at least for the time being, to get yourself through this situation. So now, like I said, you're going to go through financing. They're going to throw you something horrible, especially if you go for a used car. And this is going to be kind of your catch-22 situation. I always say go for the certified pre-owned car in this situation. Because, yes, it is a used car, you will probably get a higher interest rate. However, you're going to be taking a lot less depreciation because the first person who bought the car before you took that hit. So allow them to take that hit, because that hit and the difference you're going to pay in interest will more than likely offset each other, and more than likely it's going to offset in your favor. In the case of you seeing that it's not going to offset, then yes, go ahead, finance the new car. Again, it's going to be very specific to the time of the year, what rebates are being offered, and all those types of things when you're going into a car dealership. So just be conscious of that. But a lot of the times, like I said, if you want a more expensive car, you're going to have to go certified pre-owned. If you're going for, one of those lower tier entry level cars, then go ahead and, get the new car, take the rebates and all that good stuff. Next thing, do not trade in your current car. If you do have a car, keep the car that you have. All right. So if you have a car and it is completely paid off, keep it. I don't care how bad it is. Sell it to someone else, and you will make more money from a private entity than you will from the dealership. The dealership's just going to set you up and take your car, and you may be able to get money later on down the road to fix that car, and then have 2 cars and one that is yours and paid off in full. All right, but back to where we were at. So you've gotten a car, you're getting it financed, you've chosen whether you want new, certified, pre-owned, used, whatever. And now, like I said, the dealership is going to find some type of way to finance you. They're going to find some bank that sucks, that's going to give you some crazy high interest rate. So this is what you're going to do next. You've got this car. When you go to a dealership, typically they give you 60 to 90 days to make your first payment. So now this is your time. This is your time to roll up your sleeves and hustle. What do I mean, roll up your sleeves and hustle? So in this 60 to 90 days, you need to do 2 things. You need to save up enough money for the first 3 car payments, as well as you need to get your credit repaired. So, when in doubt, call 321 Credit Repairs. Hit me up. I'm gonna help you out. If not, call another credit repair company. Do your own credit repair DIY. There's plenty of videos on this channel that are gonna help you with doing your own credit repair. Whatever works for you. Get your credit repaired and put some positive trait lines on your profile. Like I said, you have 90 days typically from when you purchase a car. So if you add a positive trait line to your account the day you go purchase that car, it's going to post and it's going to report 3 months history by the time you would have to make that first car payment. Why is that important? Because when you're making that first car payment is going to be when that loan is going to hit your credit report. So you have 90 days before that loan hits your credit report to refinance this car. So you want to get as many positive trade lines as you can on your report. Get those positive trade lines on your report, and then you want to refinance the loan. Yes, I know it's crazy. Refinance the loan that hasn't posted yet through a credit union. And then by the time that loan actually hits your report, you will have a decent interest rate through a credit union, refinanced, and that's going to push you out again, probably another 60 to 90 days that you're not going to have to pay the car payment, which is always great. And then you're going to have that extra money once again to cash flow. And I want you to take that extra time, and instead of blowing off that money because, okay, I don't have to pay my car payment again for another 2 months, I want you to take that money and apply it all towards the principal of the loan, or keep it somewhere in an account if you get a low enough interest rate to save, because then you can wait 6 months, 12 months, and refinance that car again. And you can also make sure that you have a couple payments in the hole, just in case you ever run into a situation where you need to pay your car payment and you don't want to miss it. You lose your job, something pops up, whatever it is. So once again, figure out what type of car you want, get the deal structured. Once you get the deal structured, go ahead, take the car, and go and fix your credit. Once you fix your credit, like I said, call 321 Credit Repairs, call another credit repair company, DIY, whatever you got to do. And now you refinance that car before it posts to your credit, because when it posts to your credit, it's going to hit your debt to income ratio and it's going to drop your score. So I'm telling you, post it. I want you to do this before this loan posts to your credit, and then go and refinance the loan. And as soon as you get it, and boom, you're in there, and everything is going to work out perfectly. So as always, thank you guys for watching. See you guys in the next video. Peace out.